My name is Kelly Magnus. I'm an attorney in Minnesota at Nilan Johnson Lewis. And I'll let you introduce yourselves.
My name is DJ Warden. I'm an attorney based out of Minneapolis. Kelly's actually one of my colleagues and was nice enough to jump in last minute to moderate due to a COVID exposure. So we appreciate that. But my practice really focuses on working with micromobility companies in all facets of the business cycle, including trying to work to reduce liability, product liability, and ultimately the goal, I think, with the entire industry is to produce safe products and limit the number of accidents, right? And we partner with Brandon here on the insurance front to try to reduce costs for all of our manufacturer clients as well as operators.
Hi, everyone. My name is Brandon Schuh, and I'm the head of specialty insurance for Christensen Group. So we've been in the micromobility space now for probably 5 or 6 years. My team specializes in anything mobility. My background is products liability as well, though I used to be a risk manager for a ladder manufacturer, one of the largest ladder manufacturers in the world. So now I've taken that kind of expertise and brought it into the mobility space. Both of them highly litigated and highly claim-centric spaces, so there are some overlaps there, but excited to have you all here and talk about insurance and risk management.
All right. What is the biggest risk management issue you see in the micromobility space?
So I think there's a fundamental issue that is still, there's sort of this fine line, this line we all walk in this space with a 40-pound, 50-pound, 100-pound micro vehicle versus a 2,000, 3,000, 4,000-pound car or truck. And at the end of the day, everybody's claims in this room, for the most part, have to do with that sort of relationship. So it's how to figure out if it's a city planning, if it's an infrastructure standpoint, but from my standpoint, risk management and using David and his team to help kind of underwrite and provide some of the underpinning of what is a successful risk management program can kind of offset that. But everybody in this room should be very cognizant of that relationship where the scooter or bike or micro vehicle always fails against a 3,000-pound automobile.
Yeah, I think one of the biggest issues that we face here is that we forget that this is still a very new industry. It's a new industry in compared to what we've seen in other places where we have mandatory or voluntary standards in place. And we're making progress, and it's going to require industry leaders and everybody here to be involved in that process. But until we've advanced and the technology has matured, and newer technology isn't always coming online every single year, which is fun and exciting. But until that happens, it's really hard to defend claims, in part because we can't point to something and say, this manufacturer met the standard and there's no issue. We also have a plaintiff's bar when there is an incident or a claim who's really not that educated in a lot of sense. They don't understand the products. They don't understand the technology. They might not understand the source code or the firmware. And that makes it really difficult to educate them on why certain liability cases are misplaced or why they're overvaluing a case. And all of that filters into, we have higher exposure because legal fees are going up. And ultimately, we need more folks that really specialize in micromobility. We need more folks like Brandon who can educate the insurance companies. We need more folks like Kelly and myself who understand the products and don't have the onboarding costs and expenses associated with it. And all of that will hopefully go to reducing costs across the board for the industry, whether it's manufacturers, operators, or anybody else in the shared space.
So speaking of increasing costs, we hear a lot about inflation in the news these days. So how does that impact insurance?
Yeah, so it's one of the biggest issues that the industry is facing right now overall. Inflation is a relatively new topic in the world of finance today, but social inflation has been something that the insurance industry has been talking about for 15 years. And social inflation is essentially the value of human life has exponentially increased, anecdotally at least, over time. So that's why you're seeing large nuclear verdicts. You're seeing huge settlements. You're seeing all of these issues because your hospital bills have been trending at 8 to 10% over the last 10 years. The verdict system, everything that they see from their end impacts what I see from my end. So from an insurance standpoint, it's almost like a pie chart. If you want to put yourselves in the shoes of the insurance company, think about the different building blocks that go into making a policy. The margin that an insurance company makes, and the insurance company, now I'm a broker, but the insurance company's margin is really thin. So you hear things like combined ratios and loss ratios. Those are building blocks of how an insurance company values a particular risk. So if you have a $100,000 insurance policy, while you're averaging $250,000 a year in claims, there's going to be a problem. So, the building blocks to that pie chart are claims, underwriting costs, administrative fees, broker commissions, legal, everything goes into that, and margin is just this tiny piece. So things like inflation now, where the cost to rebuild, the cost if a battery fire happens in New York City, the cost to rebuild a facility or warehouse, that's all going up now too. So you add that in concert with the value of human life exponentially increasing. It's making for a very, very protracted insurance negotiation.
Yeah. To add to that, Brandon hit on a lot of the key points. Medical expenses are going up. So if there's an injury, if there's property damage and there's a loss, the plaintiff's bar really takes a look at it and they run a multiple, right? They say, okay, well, you're out of work this long. Your medical expenses were X or your property damage is X. And so this case has a settlement value or it's worth whatever the case may be. And so as that number continues to climb, the cost for insurance premiums and the ability to get insured, becomes more difficult. One of the things that we partner with regularly is working on kind of a national counsel type model for our clients so that you've got one law firm, one attorney who really learns and understands your business. It's kind of the one facet that we can control in this whole inflation world is becoming more efficient. You don't have to go to a bunch of different attorneys all the time to learn your business each time a new claim comes in. And we found that there's about a 30% cost savings in legal spend if we're involved kind of across the board. And in addition to that, you've got one outfit who's kind of learning not only your business, but what you can do. What are your pitfalls? What have you not done? What can you do to reduce your exposure or further educate your riders so that there's not an accident in the future? You get that value add when you've got one shop, and then we can kind of cut our legal spend, which is one of the pieces that goes into, what the insurance company is out of pocket, which then arms Brandon with some additional leverage to try to reduce premiums. So it's a really challenging time when you're having, elevated case values, but that's the one thing that we really try to focus on and bring value to folks.
How do you use data to your advantage in the insurance field and from the legal perspective?
So data has been something insurers have been talking about, obviously, for a long time. Their whole business model is based on data. Now we're in a space, as DJ mentioned, where data is not as relevant. So this is a new space. Underwriters don't have traditional benchmarks where they can say, "Oh, you're an ATV manufacturer. Here's what that looks like from a risk standpoint." So how do we get the data? Well, we get the telematics advancements in the space are really helping. So, being able to isolate some of these segments, whether it's first-time riders, experienced riders, daytime travel, nighttime travel, can you give a rider score to somebody? All of these things can play a role in your insurance and we can take those segments and apply a rate to each of those. So you're getting a debit or credit, hopefully credit, based on your ridership and your rider behavior. So we can use simple APIs to connect from your telematics to our claims adjusters to the insurance carrier, and just in real time use that data. And that's one of our sponsors who's at our booth. Connected Insurance can provide that API where everything is just bundled into one dashboard, one screen where you can see it. But more importantly, you can really drill down on rate and granulize those sorts of benefits to your advantage.
Yeah, and I can touch on data real quickly, and Brandon mentioned Connected Insurance. There are a lot of manufacturers or operators who have built in different software platforms that allow them to capture data on average ride speed or speed, vehicle tilt, all of those different things that can be captured. And it used to be when there was an accident or something, you'd say, okay, did you have a Fitbit on or an Apple Watch? And maybe we'd go try to mine that data to say, well, were you really going 10 miles an hour or were you going 25? These are different tools that in the legal industry we can use to try to further defend against lawsuits and litigation, and we use them pretty successfully.
There's a lot of regulatory talk. So what are the top headlines right now?
There's a lot of them. DJ can hit on it from a kind of a CPSC standpoint, but right now everybody knows AB 371. If you're an operator, AB 371 in California is now requiring operators to carry on behalf of the rider $10,000 in insurance. There's more nuances to it than that, but that is a big issue. That is another unknown to the insurance companies. How is this going to work? Are there going to be claims? What are those claims going to look like? I tend to think they're not going to be claims specific to those policies because the available monies to pay those claims out are relatively low. And we have New York that's following suit and probably putting out a very similar, if not more draconian requirement. And then a lesser known issue is in Nevada. If anybody's doing any business in Nevada, there's a new regulation that Nevada just wrote that said this is inside baseball talk a little bit, but if you have an insurance policy where defense erodes the policy, meaning defense is inside the limit, not outside the limit, Nevada will not allow that anymore, which is one of the fundamental and key ways to distribute insurance. So could be a big problem for Nevada. That's kind of and then New York. New York in general is just really hard to insure, but New York has a auto insurance provision that says it has to be an admitted insurance carrier in New York. But New York also has a lot of problems with comparative negligence. So nobody wants to write an admitted policy in New York for auto. So if you're a rideshare, car share, anything in the auto space, delivery, you're probably having a really hard time in New York.
From the legal side, we're seeing different regulations, including New York City, obviously, with respect to needing to conform with UL standards to, bars on selling refurbished lithium-ion batteries. The more you see at a local level, the harder it is for manufacturers and operators to meet it, which is driving up costs for a lot of our clients and is making it harder and harder for profitability in the industry. And I think we're seeing that across the board for a lot of folks. And so as we move forward, and we heard a CPSC commissioner speak just a little bit ago on some of these issues, the involvement of the industry in working to craft potentially voluntary standards that kind of set the bar and create some uniformity could go a long way. And so I think that'll be part of the discussion, but certainly there's been a lot of talk about the different regulations that are coming into play. And I think we'll continue to see that over the next few years. And, hopefully we'll eventually get to a place where there's a little bit more uniformity, because the piecemeal nature of it ultimately probably isn't that good for the business.
And I would just add one more thing. The regulation is adding to the spend of any operator, whether it's rider liability, fire protection, all these things. It's adding another policy that you have to buy. So just be cognizant of that. It's making life harder for operators with with some of these regulations. So getting ahead of it is important.
What is the status of the insurance market?
The insurance market depends on what you're doing. If you're trying to insure a fire in New York, property coverage is like at an all-time disruption phase, and then there's horror stories about the 1980s where nobody had capacity. You had to beg underwriters for anything. We're almost at that point in time again on the property side. Liability is stabilized, but it's been going up with double-digit intervals for the last 3.5 years. So it's still a very hard market. And if you have claims, it's even harder. So, being very thoughtful about how you're packaging your submission. In the 2013s, 14s, 15s, you could send a submission in with an application to an underwriter. You'd have a quote within a week, and you'd be on your way. Now we're having these long, drawn-out, very frictional relationships with underwriters where you're going back and forth dozens of times. It's like nothing I've seen, and I've been in this industry for 20 years. So it is very, very important how you communicate and who you choose to communicate on your behalf, because communication didn't used to be very valuable. Now it's incredibly valuable how you tell the story to the market, because that's what we do as brokers. We're telling a story about you, and the better we can frame that story, the better it's going to be.
What is one hidden issue that a micromobility operator might not know about when starting up?
Biggest thing that I've seen this year, where people are just blown away and surprised, if you're a scooter operator or bike operator and you're rebalancing with box trucks or sprinter vans, your insurance is probably really expensive right now on the auto liability side. Everybody thinks about insurance with micromobility being the general liability being super expensive. Well, auto liability is now probably eclipsed or surpassed that if you're rebalancing your own product, and depending on how many automobiles you have. But getting in tight corners in New York and San Francisco and anywhere else with a big sprinter van or box truck, really challenging. So go talk to people like Gem and Wave and look at electric low-speed vehicles. Go talk to people with trikes and trailers on the back of a bike. All of these things are going to be much less expensive than using sprinter vans or trucks in the future, especially with the problems we're seeing on the auto market. We've seen nationwide big companies like Liberty all removing themselves from this space, and there's very, very few left.
Yeah, similar to that, I think some of the hidden surprises are what happens 1, 2, 3 years into operation on the insurance front. Actually, a lot of folks who you talk to say, "Well, we haven't had any claims, or nothing's gone wrong yet," which is all good and fine. That's what we want. That's what we're here for, right? We want to produce safe products. We want to have safe businesses. We don't want to cause accidents, but ultimately they will happen. And so part of what we really try to focus on and what we try to educate companies on is, even if we don't have a claim right now, what can we do to make sure that we continue that trend? Because once something happens, we need to be in the best position to resolve it favorably, because the failure to do that can then snowball. And when you get to that renewal point after you've had a few claims or a few unfavorable resolutions or settlements, there's some serious sticker shock.
So, last question. How does an operator or manufacturer equip themselves to best guarantee protection versus all of the threats that we've been discussing?
Yeah, so it's along the lines of what DJ was just saying. It's very tempting to take your first offer when you're buying insurance, especially when you're starting up and you've had no claims, and say, okay, this is a great policy, it's cheap, and the deductible is small. We're going to push everything to the carrier. Well, guess what? The insurance carrier might have a different mindset about how they handle claims than you do. Control is really king or queen in this space. The more you can control the claims, the better your output's going to be. And you are a much better steward of your money than an insurance company will be. you're going to spend money much better than they will. They're generally incented to get things off of their books right away. That means settling cases for 100,000, 200,000 when it could be settled for 5,000 or 10,000 with these guys' help. So we like to write them into the policy, package everything together, and sell it as a kind of consultative, intellectual capital style piece of risk transfer rather than just buying the first policy you have.
Yeah, and quickly to finish up, we really do stress the preventative measures, risk management strategies. Anything from looking at your on-product labels to your manuals to taking a look at your dealer and distribution agreements or your consumer-facing documents when someone's, jumping on a scooter for the first time or signing up. What can we put out there to educate on safe operation and then best defend in the event that an accident does happen? Taking a look at those things is really, really important and can really, in the long run, pay huge dividends, not only from a legal spend, but then ultimately cost standpoint from operations, whether it's insurance or anything else.
That's it.
Well, thank you both. Thank you all for your time.
Thanks, everyone.